For TraderInsight.com, I'm Adrian Manz, and let's take a look at those Baltimore Chop 2 standard deviation opening gaps. This is the TradeStation output for June 25th, 2014, and what we're looking at is a lot of Baltimore Chop setups. So we got a lot of things that qualified this morning, and that makes it very, very difficult, even in the war room, for us to filter through these. But we did, and we did a good job of finding the ones that represented the good opportunities this morning. So how'd we do that? Well, let's start with GIS. Problem with GIS was there is not a lot of room between the place you'd be entering the trade, right, and the place that you would be looking for a first inflection to occur. Now that's not to say that over the course of the session this one didn't have the potential to make a move higher, but really we're constricted by that opening range, and the opening range is really a good place to look and see where you can expect price to inflect and be limited, in fact, in its excursion against the opening gap. The next one we had on the list was MPC. That's Marathon Petroleum Corporation. When the screener kicked this one out, we were interested immediately because we had this very big move to the downside. That tells us there's probably going to be a lot of potential profit on the move back up to the high of that morning's range, and of course we called it in the room right here at $79.54 and had an initial target of $80 and about 90 cents. So that was a really nice move on Marathon Petroleum, and once we got into it, look what happened. We had a nice profit extension, and if you'll recall, what we did in the war room over the course of the session was set trailing stops based on a reversal of 2 closes, and in fact that managed to get us out at $81.43. So nice big move from $79.54 to $81.43, almost $2 a share on that one. That was a really good setup and a really good trade if you managed to catch it. PSX, this one was off the list very first thing, right? We had a very big move in the first bar of trading, really nothing you could do with that one. The rest of these on the long side, it was kind of the same thing, right? Not a whole lot of opportunity after that first bar of trading. So let's take a look at the other one that we called in the room. We did call BMY. BMY wound up being a scratch stop for us, right? It got down below that entry level on the deepest bar of the pullback, and then our target was never hit. It came back up again and violated that entry level, so that 49.56 entry was taken off immediately, since the profit target on it was so small. I mean, that first bump was looking to be right down there at 49.43, and then the initial target, the main target, was 49.27. But when we had something here right in our way and then it turned around and bumped back higher again, there was no sense in keeping that trade open. The one that we did keep open and managed to profit from was Monsanto. And Monsanto, of course, deepest bar in the pullback, 127.60. And then wide range bar like this, we were targeting right down into 126.50 or so. Those of you who are in the room remember this one. And that was just off that opening tick. And then if it would have moved down through there, we would have kept that trade open as long as we could. We did, of course, hit 126.50 on the trade, and it did come down and tag into that opening range before turning around and stopping us out at a reversal of 2 closing prices. Reversal of 2 closes, managed to close out that trade 126.69. So again, nice big move on that opening gap trade. So you guys were all in the room today. You know those are the only 3 that we called: Monsanto, Bristol Meyers, and Marathon Petroleum Corporation. You saw them all unfold live, and I'm hoping you had the opportunity to profit from them. So for TraderInsight.com, I'm Adrian Manz. I hope you had a great trading day, and I hope you have a great one tomorrow.